Hello, stock traders. Victor Napier here with today's lesson. In this lesson, I want to talk to you about what is a penny stock. A penny stock, for the most part, has been described as a stock that moves between 1 cent and $5. 1 cent and $5. I also want to talk to you about what makes penny stocks so attractive. Let's use this for an example. Home Depot is selling for $100 per share. Let's say we have a small account of only $100 in it. We could then buy 1 share of Home Depot. Let's say we wanted to buy a penny stock, XYZ company, and that particular company is selling its shares for $1 per share. We could then buy 100 shares of that particular company. Now, let's see how the profits work. Let's say Home Depot went up $1. So now my 1 share is worth $101. However, if we look at XYZ company and we see it go up $1 per share, and considering we own 100 shares, our shares are now worth a total of $200. Meaning that we just profited $100 off of that $100 investment that we originally had. I want to say to you that penny stocks do have some risks, but remember this: the higher the risk, the higher the reward. And so we're going to talk about some of the other things that you're going to want to identify to protect yourself, like the term pump and dump. I really want to explain that to you and how it works, so that you can avoid the pitfalls that others have gotten into when it comes to trading penny stocks. I'll see you in the next lesson. Thank you.